And so I warn you all out there and that possibility exists. And so it's something to consider when borrowing money against retirement plans. I mean, if you've got it out, you're not going to lose it. And some plans, a lot of plans, allow 50, 60, 70%. So keep that in mind, please.
Well, thank you, guys.
Thanks, Joe.
Appreciate it.
We appreciate your call as well.
Yeah, I mean, Bob, obviously 401k plans were, I mean, they were sold to people based on the concept of free money. And annuities were sold to people based on the concept that you had a guarantee that you would never lose money even in a declining market. And so it enticed people to invest. The problem is getting out's a whole different story.
Yeah, no way, Jose.
No way, Jose. Well, that's how Wall Street...
That is a bill king, and they did it to keep the stock market up. That's what it's all about.
Oh, sure. The trader will never tell his client to sell. It's always...
The market is always going to come back. It always has.
Yeah, buy and hold.
Let me tell you something. It didn't come back in the 1930s for a long, long time, and we're going to go through that again.
Yeah. Let's go back to the phones. We may come across a break here, Dave, but we'll hold you over. Dave in Texas.
Thank you for doing that. Good to talk to you again, gentlemen.
Absolutely.
Speaking of which, a couple things I was going to bring up. You guys started to touch on them. I fear that Bob's right about the market. I fear it could be going down, and I've had a fear about the situation of both the stocks and the banks. There could be a big downward thing coming that even the globalists don't have control over. And after the break, I'll get into my point on that.
Okay, thanks, Dave. We're speaking with Bob Chapman from the International Forecaster. This is Robbie Noel sitting in for John Stadtmiller on this Tuesday. And we'll also be telling you about the Bob Chapman special when we return after these messages.
You're tuned in to the National Intel Report, the Real Talk Radio Show.
The Bob Chapman special for this Tuesday, a unique coin, Mexican 50 peso, contains 1.2057 ounces of pure gold. That's about an ounce and a quarter. These coins were first issued in 1921 to commemorate the 100th anniversary of Mexico's independence from Spain. The coin sells for $1,250. Some may say expensive. When you compare it to a $20 St. Gaudens or a $20 Liberty in the same condition, it is at a substantial discount. The equivalent $20 Saint or $20 Liberty in AU condition is going to run you somewhere south of $1,350. These coins are substantially less premium, and you don't have to order 5. If you want to order 1 or 2, that's fine. But if you order 5 or more, you receive a free subscription to the International Forecaster, 1-year subscription, which you can receive via email or hard copy. And all you have to do is call Republic Trading Group 1-800-691-7898. Let's go back to the phone. We're speaking with Dave from Texas.
Okay, go ahead.
Afternoon again. A couple of points I was going to make. On the retirement issue, I myself don't believe that the government is going to be able to get the votes in Congress to force, for example, IRAs and 401ks into Social Security. What I think they are going to try to do at some point down the road, where I think a scam may be brewing, is the difference between Roth IRAs and regular IRAs, where theoretically you agree to expose your current investment as you put it in to a Roth IRA to upfront taxes. On the theory, you will owe no taxes on the back end when you take it out after retirement. The problem with that is you have less money invested to earn as principal interest, compound interest return on over time. And then if they decide to change their mind and tax what you pull out 40, 20, 30, 40 years hence anyway, you're not only not better off, you're worse off than if you just had a traditional IRA and didn't pay the tax up front and just wait to see if you can shield or minimize your taxes that you owe when you start pulling it out later on when you do retire. So you may be better off with a regular rather than a Roth IRA, even though these brokers push these Roth IRAs on people. Now, I'm starting to wonder, I don't have one, but for those who do, I wonder if that's a good idea or not for people considering that. But the other issue I was going to raise was on the overall thing with the markets and the banks. They have 19 top banks that they had these stress tests on. 10 or 11 of them failed. And they're at least, by their own admission, $75 billion short. Now, if I'm not mistaken, that's to get them to effectively 10 cents on the dollar of deposits versus what they have loaned out. If they got the $75 billion that they say they're going to be able to raise in capital markets. I don't know if that's true or not. But that doesn't count, even if that were an accurate figure, and it's probably optimistic at best, using just that figure in itself. That doesn't even count the derivative exposure, which could be trillions of dollars more than that. So, in effect, what they really are is they're way overdone on their debt and potential obligation versus their actual assets to pay them out. And the real truth of the matter is, this is a concern I've had, is I don't believe that there's sufficient, I feel there's not sufficient funding for FDIC to cover the accounts in the event of a loss or possibly even collapse of many or more of these top banks. Now, not that I want that to happen, but if that were to start to happen, the whole thing could come crashing down, and no one, even if the globalists don't want it to happen, they couldn't prevent it at that point, and the whole thing, everything could come down, and it could be worse than the 1930s. And that's my big concern.
Well, I think that the leverage in the banks, the 19 major banks, probably averages about 30 times deposits. Some of them, like Bank of America, is 40, and J.P. Morgan Chase is higher, probably around 60, if not more. And Morgan has probably 80% of the derivatives. And so maybe 75%, which is horrific. And so these banks are all bankrupt. I mean, it's as simple as that. This business of giving TARP money back is just so they can continue to get their enormous salaries and bonuses. They're still on the edge, and they've received other funds. And also, they've been selling stock in the market. That's why the Fed and the Treasury has kept the market up where it is, so they can dump all of these shares on the market to these poor, unsuspecting professionals. And as I said earlier in the program, I expect that the financials are going to drop back 50% when we go back to 6,600 to test it on the Dow. And so the situation is worse than you think it is.
I agree with that. I think the market's probably going to fall at least another 1,500 points less than what you just, of my own guesstimate.
I'm looking for 38 to 4,200.
It could go even that low, potentially. And I fear that, and the numbers you point out, I was being kind by not using those figures, but they agree with what I suspect was the case with the big banks. They're even more exposed than 10 to 1, 30 and 40 and 50 to 1 or whatever it is. They're just that much more short of where they need to be. $75 billion isn't even a drop in the bucket of their needs. Despite all the trillions, they've already ripped us off from the TARP funds, which actually they've leveraged that $700 billion. Most people don't realize $2 trillion in actual additional debt they've taken on. That's just since last October. They need trillions of dollars more to cover their existing obligations, and there's really no way to pay for it all.
And
so
they've been gambling with the money. They've been gambling with that money.
Right.
And incidentally, Geithner said, well, with the money we get back, we're going to bail out banks. Well, that means the money's going to the FDIC because they've asked for $500 billion. That's where it's going.
Didn't the FDIC earlier this week ask for an increase in rates?
Yeah, they did.
Yeah, they did, but they're asking for $500 billion from the government.
Well, I mean,
it's only a matter of time. That's why having gold and silver-related assets is so important. And incidentally, I was going to comment, the reason the premium is lower on those Mexican centenarios is that you don't see many of them outside of Mexico. They're very closely held within the country.
And very good on the pronunciation there, Paul.
Well, I did learn a little Spanish.
Yeah, I was battling that during the break, and I thought, And I'll just tell them about the 100th anniversary.
And, getting the smaller denominational coins, the 20s,
is virtually impossible.
And it's impossible.
Yeah.
They just are not around.
Look, you can't even get Libertads, for goodness sake.
No, that's true, and they're supposed to be sold every day at the bank.